What's happening, my beautiful financiers in training? Welcome back to another jam-packed episode of the Do Different Better show, where we talk about wealth, wisdom, and money moves, making finance simple for everyday people. I'm your host, Elaine Rasmussen, CEO and founder of Social Impact Now, an impact investing and social finance advising firm, and managing director of the Integrated Capital Fund. Thanks so much for joining me today. On last week's show, I took you on a no-nonsense tour through the high-stakes game of hedge fund investing. From long, short strategies and fee structures, I broke down some key strategies, the risk and rewards of this elite investment club. I also talked about whether hedge funds are even right for you and how to make some smart decisions when it comes to high-risk, high-reward opportunities. Today, we're going to be diving into a game-changing topic: how to leverage technology for financial success. And we've talked a little bit about that, but we're going to go and take an even deeper dive, particularly as it relates to managing your investments and getting your investments off the ground. Yes, we're going to be talking about investment apps and tools and how they can help build your wealth, even if you're just starting out. So stick with me, because by the end of this episode, you'll be ready to use tech to your advantage, whether you're an investing newbie or a seasoned pro. So let's get into it. So first things first, why are investment apps so popular these days? Well, it's really quite simple. They've completely changed the game. You don't need to have thousands of dollars or a fancy finance degree or MBA or even tons of time to start investing. All you need is your smartphone, a few bucks, and some curiosity. That's it. Investment apps are bringing Wall Street right into the palm of your hands, and I, for one, am here for it. Here's a fun fact. Did you know that nearly 75% of millennials and Gen Z investors say they prefer managing their money through an app rather than a traditional financial advisor? Why? Because it's easier and it's convenient and gives them a lot more control. You can literally invest while you're binge watching your favorite show or waiting in line for coffee. Investment apps make it really accessible for anyone to start, no matter what your income level is. Whether you've got $5 or $5,000 or $5 million, you can start investing. Plus, these apps offer a lot of automated features like robo-advisors that can help manage and rebalance your portfolio so you don't have to worry about constantly checking the market. It's basically the lazy person's guide to growing wealth. And I know we're all here for anything that makes our lives a lot easier and simpler. So, what are the different types of apps and what are the different levels? There really is no one size fits all when it comes to investment apps. Different tools work are for different people, and they all work a little bit different. And depending on where you are in your investment journey, this is where you want to see what's going to be the best fit for you. So I'm going to give you a little bit of a breakdown here, and you can start your journey there. So for beginners, if you're really brand new to investing, you've got your budget, you've been listening to this show, you've been getting your house in order, your financial house in order, but this is going to be new to you. So you want to start with something simple and really intuitive. There's some great apps like Acorns with an S, Stash, and Robinhood, and there's so many others that are on the market. You can Google it, but you can find the one that's going to be perfect for you as a beginner. They don't require a whole lot of money to start. In some cases, they actually help get the savings going to you so you can actually build up a nest egg to actually start your investing journey. But what's really great is, one, they don't require a lot of money to get started, and they actually guide you through the process. Acorns, for example, rounds up your spare change from everyday purchases and invests it for you. That's right, your daily latte habit could actually be growing your investment portfolio without you even noticing it. For my intermediate investors, if you've been investing for a little bit, maybe you have a rental property, but you haven't invested in the stock market, or maybe you have some investments that you inherited, but you haven't actively gone and done any investing on your own, you might want something a little bit more sophisticated. So I would definitely invite you to check out platforms like Betterment or Wealthfront or M1 Finance. And once again, there's lots of others. I'm not endorsing any of these, but they're good ones to start with. These platforms use algorithms to manage your portfolio and rebalance it automatically. Betterment and Wealthfront are also great for long-term goal-based investing like saving for retirement or buying a home. But a lot of the major finance companies are all getting in the game and creating their own platforms. So if you have a 401k that's on a particular platform, that particular platform may also have a adjacent investment platform that you can go on your own outside of your 401k. You just need to ask them if they have that available. Now, for my advanced investors, those of you who are seasoned pros, there are some apps like Thinkorswim, which I believe was bought or lives on the Charles Schwab platform. There's E-Trade, and there's also Interactive Brokers. And those are definitely for your more advanced investors. These platforms offer much more sophisticated tools like real-time market data, stock screening, and detailed analysis. If you're ready to dig into the nitty-gritty of the markets, these are probably more available to you. Also, if you've got more time to be checking on your investments and you're going to be a lot more methodical and systematic about checking on your investments and making moves with your investments, these platforms are going to give you a lot of data to be able to make those decisions very, very quickly. So no matter where you are in your journey, there is an app that can help you grow your money. Just start where you're comfortable at and scale up as you go and get more and more comfortable. If you're still unsure, start small. Download a beginner app like Acorns, or even Investopedia has a platform where you can start with play money. I believe they give you $100,000 of play money, and you can just start there. And once again, it's not real money, but you can start to get comfortable with like, how often am I going to be checking this? What kind of portfolio do I want to build? And they've sort of gamified the work. But the whole idea is for you to start playing around with it, getting really comfortable with the basics, and moving on to more advanced tools when you think that you're ready. So now let's transition to talk about how these apps actually work. At the heart of every investment app is a platform that allows you to buy and sell and manage assets like stocks, bonds, ETFs, and more. And if you're not sure what stocks, bonds, and ETFs are, check out some previous episodes because I go over all of them. Some apps like Robinhood let you trade individual stocks and cryptocurrencies with no commission fees. Other platforms like Acorns and Stash are more focused on making long-term, small-scale investments over time. So, many apps offer automation features. This means that you can set up your recurring investments without having to think about it at all. Set it and forget it. Betterment and Wealthfront are really good examples of what are called robo-advisors. They take care of everything from asset allocation to rebalancing, and based on your financial goals and your tolerance risk, will make those adjustments to your portfolio automatically. And here's something that's really cool. Some of these apps even optimize your investments for tax efficiency. I did a whole episode on how you can leverage tax efficiency with your investing portfolio. What tax efficiency means is less money is going to Uncle Sam and more money is staying in your pocket so that you can continue investing and growing your portfolio. Wealthfront, for example, has a feature called tax loss harvesting. I've also done an episode on tax loss harvesting. Tax loss harvesting with this platform automatically sells your losing investments to offset gains, potentially lowering your tax bill. But it's not just the features. It's also about how you use them. Setting goals is going to be key. For all of my friends out there who are not really big fans of setting goals is really super powerful. And it can be it's like going to the gym. If you haven't been used to setting goals, it can be a little painful, maybe a lot painful when you're first starting out. But like going to the gym, once it becomes a habit, it's going to be so much easier. And you're really going to start to love to be able to see the results of your work and see you hitting some of the goals and being able to check them off the list. But maybe you want to save for a vacation, maybe you want to build an emergency fund, or you want to start planning for retirement. Whatever it is, these apps can really help you map out a strategy and stick to it. So, but before we wrap up this segment, I would be remiss in being able to tell you about some of the common mistakes that people make when it comes to these investment apps. One of the biggest ones, and once again, I've talked about this in the past, is frequent trading. I get it. The apps like Robinhood make trading stocks feel like a video game. But every time you sell an investment, you might be triggering taxes on your gains. You also might be missing out on opportunities as the stock will dip and rise. And so you don't want to be selling it every single day. Not to mention that frequent trading can lead to higher costs and, quite frankly, stress. And when we talk about higher costs, sometimes that could be transaction fees. So these are all the things that you want to be mindful of. And that's why sometimes, especially if you're a beginner, setting up a robo advisor might be the thing for you, just so you can start to get an understanding of what is the cadence of these things. How frequently is the robo-advisor making trades? What are you seeing are maybe some events that trigger that trade? Getting really used to like what's happening, because it is a little bit of an art and a science as when you're managing your portfolio as relates to investments, and seeing the ebbs and flows and ups and downs and natural volatility that comes. The upcoming election, this show is probably going to air right in advance of the election. What's happening as part of the election process does have some implications to what's happening in the stock market. So you just want to be mindful of having those events trigger you. And is this something that can pass in the next couple of days? Or is this going to be something that has some longer term implications to your investment portfolio? Or is there new legislation that's coming down that may impact the companies that you're invested in? So once again, if you're just starting out, I highly, highly, highly encourage you, recommend that you really start off with something that's a little bit more passive, maybe starting with in a platform like Investopedia, where you just get to play around. You play around with somebody else's money, right? And really start to understand what's happening, how you want to interact with this tool, how frequently are you going to be checking in, and particularly how busy you are, and can you be checking it on a weekly basis, or really is your life set up that you need to be checking it on a monthly basis? And so if that's the kind of time that you have available, making sure that the tool that you use aligns with the time that you actually have available, right? But you may have heard the term day traders. Those are people who are trading more often. And quite frankly, as the term says, they're actually managing their trades on a regular basis, probably on a daily basis, if not an hourly basis, on top of their regular job, if that is how they're spending their time. But the next thing that I want to talk about is that another mistake is that people are not using tax advantage accounts. And once again, I've done a whole episode on this. If your app offers options like IRAs or Roth IRAs, please, 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 please take advantage of them. You're essentially missing out on free money by ignoring these tax efficient accounts. So one thing that I do want you to remember, that the stock market is a long game, right? Unless you're going to plan to be a day trader, you're investing for the long haul. Typically a minimum of a year, but typically you're looking at a 5, 7, 10-year sort of timeline, right? If you look at the stock market over the last 150 years, you will see the upward trend is the trend is upwards, right? However, if you start to zoom in, you start to see the ups and downs of the stock market. So you just want to be able to be aware of, if you zoom in and versus zooming out, how you can start to see how the stock market actually works. But over time, the stock market has always eventually goes up, right? If you see the upward trend, when you zoom out over that 100 years, you'll see that it trends up. But once again, once you start to zoom in, that's when you start to see the dips and ebbs and flows. You get to see the 2008 housing market crash. You see there was a big crash in the 90s, right? You can see those things. So once again, being in the stock market is a long game. Try to avoid constantly checking your portfolio. It really can be nerve-wracking, right? Especially if you're in it for the long haul. It's tempting, but more often than not, sticking to your strategy will pay off better than just chasing quick wins, right? The old adage of slow and steady wins the race. That's what we're going for here, right? So here is your action step for today. Take a look at your current investments. If you haven't started, download one of these apps we talked about and begin exploring. For those of you who already have investments, ask yourself, are they in the right accounts? Are you maximizing your tax efficiency? And a little bit of organization can go a long way in growing your wealth. And the last tip that I'll say is, if you have a 401k, go and find out if the platform that your 401k is on is offering any of these other tools, right? Sometimes it's sitting right there underneath your nose and you don't even know it. So remember, this is just the beginning. And in the next segment, we're going to dive into the best tools and features that these apps offer to supercharge your financial success. Be sure to subscribe to Do Different Better if you haven't already, and share this episode with a friend who needs to start investing. Stay tuned, and I'll catch you after the break. Welcome back, everyone. I hope you're ready because we're about to dive into the features and benefits of some of the most popular investment apps. Whether you're looking to invest with minimal effort, start small, or even make investing fun, I've got something for you. Today, we're going to be talking about robo-advisors, micro investing platforms, and social trading apps. So trust me, there's something for every type of investor. So let's get to it. So first up, we're going to talk about robo-advisors. If you're someone who doesn't have a lot of time, like myself, let's be real. The desire to actively manage your investments is a lot. Robo-advisors might just be your new best friend. So what exactly is a robo-advisor? Robo-advisors are digital platforms that use algorithms to create and manage a diversified investment portfolio for you. You simply answer a few questions about your financial goals, your risk tolerance, and timeline, and boom, the robo-advisor handles the rest. It's automatically going to invest your money in a variety of assets like stocks and bonds and adjust your portfolio as needed. Think of it as your own personal financial advisor, but way more hands-off and way fewer fees. So you and I talked about in the previous segment, Betterment, Wealthfront, or SoFi Invest. That's a big one. They're some of the most popular robo-advisors. I am not endorsing any of them. I encourage you to go and check them out yourselves, but they can help you invest in a diversified portfolio with a minimum amount of effort. And they're particularly great for beginners or anyone who doesn't have a whole lot of time and to research all of their investments and all of the background of some of the investments to be able to make some really good decisions. So now I'm going to talk about some of the pros and cons. Here are the pros of robo-advisors. Robo-advisors typically charge much lower fees compared to a traditional financial advisor. You're looking at around 0.25% or 0.5 or half of a percent in management fees versus the 1 to 2% you might pay a human advisor. There's nothing wrong with a human advisor. Some of us prefer to talk to a human. But once again, going back to the statistic I talked about earlier, Gen Zers and younger Gen Xers, definitely there's some phone phobia, there's some people phobia. So, and quite frankly, they're wanting some more efficiency, so they prefer to not necessarily interface with a human. Some of us, I'm on the older end of Gen X, I definitely prefer picking up the phone and knowing that I can talk to a human and be able to build a relationship with a human. The second pro of using a platform, a robo platform, is that these platforms automatically rebalance your portfolio to keep it in line with your financial goals. This means a lot less work for you. Once again, if you've got a human that's doing this, this human is not only managing your portfolio, they're managing several other portfolios. So once again, to be able to have a platform that is automatically adjusting your portfolio in real time could be something that's a selling point for you or a pro. The last one I'll talk about is tax loss harvesting. So some robo-advisors like Betterment, Wealthfront offer tax loss harvesting, which can save you money come tax season. This means that they automatically sell investments that are down to offset gains elsewhere in your portfolio, helping you pay less taxes. Now, let's switch to some of the cons. One of the cons, if you like to have full control over your portfolio or you want to choose specific stocks to invest in, robo-advisors may not give you the flexibility that you're looking for by the nature of it being called a robo-advisor. The other thing, as I mentioned or alluded to previously, is the lack of personalization. Yes, the algorithm personalizes based on your financial goals, but if you need that one-on-one financial advice or you have a situation that's coming up that you're not really sure how it's going to impact your portfolio, robo-advisors might not be enough. You really want to have that human touch that you can actually talk to somebody, get somebody's wealth of knowledge and experience to give you insight as to helping you make some decisions. At the end of the day, robo-advisors are great for people who want to invest without spending too much time managing their portfolio. It's the set it and forget it group, but make sure you check in every once in a while. I always encourage you, if you're using any kind of technology, whether it's AI, robo-advisors, there needs to be some sort of human checking to make sure that things are moving in the direction that you want them to move in and not just letting the machine take over. Now, let's get into some micro investing platforms. Now, if you're really just getting started investing and you're thinking, Elaine, I don't have thousands of dollars to invest, I got you. Let's talk about micro investing. Micro investing platforms like Acorns and Stash are really perfect for anyone who feels that they don't have money to invest. Once again, I'm not endorsing these platforms. Definitely do your own due diligence and check them out to see which one to be the right one for you. But first, let's talk about what is micro investing. Essentially, these platforms allow you to invest small amounts of money, sometimes even your spare change, into a diversified portfolio. Acorns, for example, rounds up your purchases to the nearest dollar and invests the difference. Say you buy it for $4.75. Acorns will round that up to $5 and invest the 25 cents for you. Sounds easy, right? Well, there's some great benefits for micro investing for new investors. One is it's easy to get into. You don't need a lot of money to get started. In fact, Acorn starts investing with your spare change, and Stash allows you to start investing with as little as $5. Next is the minimal risk. Because you're only investing small amounts, there's less risk of losing what you put in. You can learn how investing works without really worrying about losing large sums of money. And then finally, slow and steady growth. Micro investing may not make you rich overnight, but it's a great way to build up a habit of investing over time. These small amounts can grow into something substantial, right? So I know someone who saved over $500 in a year just by rounding up their spare change through Acorns. They barely noticed the difference in their day-to-day spending, but that small change started to accumulate pretty fast. It's the power of consistency, right? So once again, micro investing is a fantastic way to start building good financial habits. It's investing on autopilot. And if you're not ready to throw in hundreds or thousands of dollars at once, it's a great way to dip your toes into the market. All right, now let's switch gears to talking about something a bit more interactive: social trading and gamified investing. If you love learning by doing, if you're an experiential learner, or even better, by watching somebody else do it, then social trading platforms like eToro and gamified investing apps like Public or Stockpile might be right up your alley. Social trading allows you to follow and even copy the trades of seasoned investors. There are platforms like eToro that make this super easy. You can see how top traders are allocating their portfolios and mimic their moves, which is an excellent learning tool for beginners who want to get better at stock picking. It's like having a mentor, but in real time and online. On the other hand, there are apps like Public and Stockpile making investing feel like a game. You can earn achievements, you can participate in leaderboards, and you can share your trades with friends or a community. It's designed to make investing more engaging and fun, especially for people who might be intimidated by the traditional stock market. Here's a tip. If you want to learn by observing seasoned investors, social trading can be a great tool. And if you're looking for something that's way more fun, a gamified way to approach investing, apps like Public can really make it feel less like a chore and more like an exciting game, right? And if you have a competitive spirit, that might be the thing for you. And it might be the thing that really draws you in to how you might be wanting to interact. And it might be even a great way to connect with others, especially if you're already, like we talked about in a previous episode, in an investment club. Some of you in the investment club might want to go onto these apps as a team or some other way of, getting together, but then you can start beating each other and working with each other and moving each other forward by inspiring each other through gamifying the whole investing process. So now what is going to be your particular action step, right? I'm always going to leave you with something to do. So if you're new to investing or you just want to get started, once again, there are lots of apps like Acorns or Stash for you to start small. I think even maybe Rocket Money might be offering something. But once again, if you have a 401k platform, an IRA platform, go find out from that platform if there are other tools that you might be able to use, like an Acorns or a Stash that will automatically, you link up your credit card, you link up your debit card, and it'll start accumulating the change that you have from your purchases and start dropping them into some kind of wallet for yourself. But once again, if you are more seasoned, you might want to check out a robo-advisor like a Betterment or Wealthfront to automate your portfolio. But once again, if you're still hesitant, I definitely encourage you to look at Investopedia's platform. They have a platform where you can just start to play. Once again, you're going to get $100,000 of play money, right? It's not real money, but once again, you can start thinking about, how do I want to set up our portfolio? What does it look like to do research in stock? And as part of the platform, you can actually highlight stock that you want to keep an eye on. You can do research of stock right there on the platform. It's a really great way to really just get started, right? But a lot of companies are out there, I think, like a Vanguard and Charles Schwab are creating these opportunities for you to learn by doing. So I definitely encourage you to go on Google, put in, new to trading, apps for new investors, apps for new traders. A lot will come up, and just try one, right? And if you really want to mix things up, explore social trading platforms or gamified platforms to make investing fun or educational. Maybe you go on with your kids. You start doing this with your kids. That could be a fun thing, and start having a competition to see who's actually moving money further, particularly on the Investopedia Play app, right? You can have a little running competition, right? But what I want you to do is I want you to go out and try one of these apps today. Even if you just download it and explore the features, I want you to take that first step. So we're going to be wrapping up this particular segment. And so I really want you to click the subscribe button to Do Different Better. And I really want you to come back and see me as we wrap up this particular episode. But I want you to join me after the break, where I'm going to show you how to do different better in building your financial future. Hey everyone, welcome back to the Do Different Better show. I'm your host, Elaine Rasmussen. We have already talked about the different types of investment apps and their key features, and now it's time to turn it up a notch. Let's dive into how we can maximize these tools for the long haul for your financial success. We're going to go talk about from tax efficiency to automation. This is where the real magic happens. Trust me, these strategies can turn your investing journey from good to great. So let's jump in. First things first, let's talk about one of the most important aspects of investing, and that is tax efficiency. Did you know that even if your investments are killing it, you could be losing a chunk of your gains due to taxes? That's where some of your investment apps, like I've talked about Wealthfront and Betterment, come with some handy features like tax loss harvesting. Excuse me. So once again, let's talk about what is tax loss harvesting. Simply put, it's a strategy where the app automatically sells investments that are losing money and offsets your losses against the gains that you've made somewhere else, right? So a stock that's doing well, you want to offset the potential gains that you have from that stock doing well, and you want to actually lose money on purpose to lower your tax liability or the amount of taxes that you may have to pay at the end of the year, but based on how much you've gained on your investments. This will help you lower your overall tax bill. And the best part is the app does it for you. You don't have to manually manage anything. The process is automated. Now, if you want to take tax efficiency even further, consider setting up an IRA or Roth IRA. Platforms like M1 and Fidelity make this super, super easy. IRAs are tax deferred, meaning you don't pay taxes on your earnings until you withdraw them in retirement. Roth IRAs, on the other hand, offer tax-free withdrawals in retirement as long as you follow the rules. And those rules might change between now and when you retire. So that's why you definitely want to make sure that you're paying attention and you understand what are the rules and implications of you taking any kind of withdrawal from any of these platforms, whether it's your investing platform, your IRA, your 401k. There are typically some rules, some limitations, and also potentially tax penalties for withdrawing the money. So you want to make sure that you are on top of that. So here's a tip. Whenever possible, make sure your gains are happening in a tax-advantaged account. Don't leave money on the table by getting hit with avoidable taxes. Trust me, over time, the savings will add up and you're actually putting more money that's going to be investable, which then compounds as you're growing a portfolio. So Next up, we're going to level up your game by talking about some more advanced tools for portfolio tracking and analysis. Even if you're not a Wall Street expert, it's really important to keep tabs on your investments and how they are doing. There are great apps like Thinkorswim and Personal Capital that offer some next level features to help you stay on top of your portfolio. So what do these tools offer? These platforms provide real-time data, stock screeners, and some serious charting tools to help you with informed decisions. I love a spreadsheet, and I also love a pie chart. I also love a bar graph. It gives you a lot of information super, super quick. I'm a visual learner, so being able to look at something and be like, oh, I can see exactly how something is performing over time. It allows me to inform some decisions instead of reading a whole bunch of documents and reading a whole bunch of reports. Looking at a pie chart or looking at a graph gives me some really great information. So for example, if you're curious about a stock's performance over the last year, Thinkorswim can give you a detailed charting that will give you the insights that you need super, super quick. Now, if you're looking for a more holistic view of your financial life, Personal Capital is great for tracking not only your investments, but also your net worth, your cash flow, and your budgeting. Think of it as your own personal financial dashboard. It's a really powerful tool, especially as you become more and more advanced in your financial management journey. So why does tracking matter? Even if you're not an advanced advisor, using portfolio trackers can give you a sense of how well your investments are doing and help you spot trends over time. Maybe your stock picks are doing well, but your bond investments are lagging. Tracking can help you make adjustments in your portfolio. Here's a tip for a beginner. Don't be intimidated by these tools. Even if you're new to investing, they really offer you a great way to stay informed about your financial health. And guess what? When you track your progress, it's easier to celebrate those victories along the way, right? Maybe you celebrate with I'm going to go out and a $500 shopping spree to celebrate that I got my investments to a certain level. I'm big on reward and I'm big on celebrating. I think all too often, particularly in the Western culture, all we want to do is work, and we forget to celebrate. And we wake up at some point in the future and our whole life has gone by and all we did was have our head down and work. We didn't celebrate the moments. We missed the magical moments of what it is to even be a human, what it means to be alive. So I really want you to connect this financial journey and look for opportunities to celebrate. Hey, did you hit an investing milestone? Celebrate, go out to dinner, go on a small trip. Join, do something to honor that moment and celebrate that moment, because the next time make it a little bit bigger and the next time make it a little bit bigger. Those are all the things that gives you something to look forward to, right? So finally, let's start to talk about automation, right? So if there's one thing you can take away from this episode, it's that automating your investments can be a really big game changer for your long-term wealth building strategy. Once again, there's lots of apps out there that allow you to, and I've talked about some of them today, that allow you to set up recurring contributions. This means you can set it and forget it and let your money work for you, whether it's $50 a week or $500 a month. The key is consistency. I talked about in the first episode how I really learned that lesson in the beginning of my financial journey of just being able to save $10 a week. I just started putting $10 a week away. And once I started not feeling that $10, I started adding $20 a week. And then I went to $30 a week. And pretty soon over time, I had a really nice nest egg. And that was all because I started with where I could start. So once again, I don't want you to think, oh, this is too big. I can't even get started. Start with $1. Start with $5. Anything is better than doing nothing. But the whole idea is that this approach is known as dollar cost averaging, where you invest a fixed amount regularly, regardless of the market ups and downs over time. This will help you avoid the trap of trying to time the market, of getting in just at the right time, which we know is almost impossible, right? While there are lots of great tools that can make lots of predictions, nothing is perfect, right? But let's be honest. Doing that is even hard for the professionals. Now, another great feature is automatic rebalancing. So let's say your target portfolio is 60% stocks and 40% bonds. As the market fluctuates, that balance can shift. Robo-advisors automatically adjust your investments to keep them aligned with your target asset allocation. That 60-40 split is what, in this particular example, is the allocation, how you've allocated your assets across different investment instruments. So I just talked about in this example, 60% stock, 40% bonds. This ensures that you're not overexposed to riskier assets and that your investments are performing optimally. So why is automation key? Automation is essentially helpful for those of us who are super busy. You don't have time to be worrying about missing an investment opportunity or letting your portfolio go unchecked for months. With automated systems in place, you can build wealth while focusing on other aspects of your life, like family, career, or even just chilling, right? Once again, we work a lot. So let's take some time off. I'm a big fan, right? So here's one of my call to actions for you today. Set up some automatic contributions. Start small if you need to, but get into the habit of investing regularly. Over time, even these small contributions can grow into something substantial. think about the power of compounding, right? So every dollar you put in, you're actually compounding the total amount of dollars that you have, right? And every time you do that, you're making the pot bigger and bigger, and not just making the pot bigger by that investment. It's the pot is now grown bigger by that investment, plus whatever gains you have, the interest that you gain, or the gains in the market as a result of now that pot being bigger, right? That's how that works. So once again, if you are serious about getting into these tools, maybe doing it as a going onto a tech platform isn't for you. That's okay, right? What you can start to do is start with a high yield savings account, right? I think there's a lot of great banks out there that got some high yield savings account. Once again, if you're not necessarily ready to go to a digital platform, but you really want to do some of this compounded investing, the way you can start is open up a high yield savings account at your local community bank, your local community development financial institution, and go ahead and start. Once again, most credit unions, you can open an account with $5. So start an automatic withdrawal from your payroll, an automatic withdrawal from one bank account to another. A lot of banks now, especially the larger banks, you can actually transfer money from one bank to another bank. For a long time, you couldn't do that. It was a manual process. You had to go to the bank, take out money, and then go make a deposit into your other bank if you wanted to keep those bank accounts separate. And there's a great book, I think it's called Profit First, right? What they say is you should actually have, if you're trying to do some saving, go put it in a separate bank account. Because if you create a savings bank account where all of the rest of your banking is, it can be too easy to dip into that savings account, as opposed to putting it into a different bank, and particularly a bank that may have restrictions on your withdrawals for that bank account. It allows you to not make it so easy for you to access that money. But back to my previous point, I just want you to get started. So start taking $5 and then $10, then $20, then $30, and start having that money just automatically come out of your bank account, automatically come out of your payroll. I know that there's a feature on Gusto. What Gusto allows you to do is, as an employee on the platform, if your employer uses Gusto, you can set up your bank, you can set up your payroll deductions to go to several different accounts. So if you wanted to go to a business checking account, you wanted to go to your personal savings account, and you wanted to go to a personal checking account, you can do that. You can have your paycheck divided up into a number of different ways, right? So a lot of times we don't even ask if these tools are available. So once again, I don't know if some of the other platforms like ADP or some of the other payroll platforms, but go and ask your HR. If you're working in a company, ask your HR department if these are something that's available. If you're automatically on these apps, your payroll is already done through an app, and you as an employee have to be on the platform. Start digging around in the platform. Go ask their support, their chat or their support, and find out what are there other tools that they make available to you to either do automatic deductions or investing, or what other tools that they have. Is there an IRA or a Roth IRA or some kind of 401k that they offer that's outside of the company but lives on the platform? So that's another thing. Sometimes these platforms, they offer other things. They just may not be available through your employer, but you as an individual, because you're already on the platform, have access to them. So once again, you've got to start asking these questions, right? You just got to get going and start the investigative process, start researching, right? But first things first, you can go talk to your HR department and see what's available, because there might be some other benefits that your HR department has that you don't even know. If you're a small business, once again, if you're using QuickBooks or if you're using Bench or if you're using Gusto, a lot of these platforms offer some of these tools, not only for you as a business owner, but also to your employees who are on the platform. So once again, dig around. That's my call to action for you. So once again, another action step, if you're really serious about long-term wealth, take the time to set up some reoccurring investments in one of your accounts. Even if it's just $50, get that automation working for you. And if you're feeling super ambitious, start using some of the advanced tools to track your portfolio and maximize tax efficiency. Trust me, your future self will thank you. So, thanks for tuning in to another episode of the Do Different Better show. I'm your host, Elaine Rasmussen. Today, we jumped feet first into the powerful tool of investment apps and tools that are designed to help you build wealth over the long haul. I cover tax efficiency hacks and robo-advisors, portfolio tracking and automation, setting up tax-advantaged accounts, and helping you to harness the power of automation, as well as using real-time tools to stay on top of your investments. I want you to join me next week for some more action-packed finance episodes of tools, tips, and resources to build your financial empire and take your financial freedom to the next future. I'm really super excited. I'm going to have some great guests that you're going to want to hear from. So make sure that you hit the subscribe button and share this podcast with other friends that you know you want to get into the wealth building game. Please, please, please leave us a review. I'd love to read the reviews. I actually do read them. Let me know what you think of the show. We love the comments. Tell us how this show has helped you. If there's a money or finance question you have, or if there's someone you want me to interview, hit me up on LinkedIn or Instagram at Do Better with Elaine. I will see you next week when I show you how to do different better.